Hi, I'm Barbara Friedberg with Barbara Friedberg Personal Finance, and I am here today chatting with Tyler End of Retirable. So, Tyler, tell us a bit about yourself and how you became interested in retirement planning and advice. You look like you're way far away from that segment of your life.
That's because you can't see all my gray hairs on this Zoom call. But thrilled to be here. Thank you for taking the time to chat about Retirable. I'm excited to tell you more. So yeah, I have a pretty interesting story. So I started my career at Northwestern Mutual in Milwaukee, and got my CFP, but really fell into a practice where we focused on decumulation planning. So 23, 24-year-old CFP, sitting in the room with 65 and 70-year-olds every day. It was great. I loved it. You're talking about grandkids and stuff a lot, but the financial planning aspects for retirees, I just really gravitated towards. It gets much more tangible when you go through the retirement phase and you're actually producing that income that people have been thinking about for so long in their lives, and you're actually making the elections on Social Security. And on the personal side, there are a lot of life changes that you can add a lot of value with advice and expertise and listening to for somebody at that stage. So I really enjoyed it, loved it. But after that, I kind of got the startup itch, and I moved out to New York to join a company called Policy Genius. Spent 4+ years there. It was direct to consumer insurance distribution. And, it was part of the whole wave of fintech where they were making financial products and services more accessible. So making it easier to shop, compare, buy, all online, life insurance, disability, home and auto. It was a great company. Loved the people that I met there, learned a ton. And, at some point I said, hey, we've had all this fintech innovation. We have products that are more accessible. I can take what I've learned from my past two experiences, really marry them up and create a product where we're able to deliver that high-level, sophisticated decumulation advice, but make it accessible to everyone, right? So most financial services often gravitate towards higher net worths. We can really lower the barrier of entry and give people access to all that advice, even if they have, less than $1 million, less than $500,000 at retirement age.
Yeah, as far as I know, and I've been around the block once or twice, you are the only company that I'm aware of that focuses on the smaller net worth investor and helps them to decumulate and manage their retirement funds. And we're going to tease it a little because I'm not going to tell you right now, but we're also going to talk about the insane fee model that you have, which I heard about it. We've been in touch for probably a year at least, and I still can't get over it.
Yeah, we're
So,
pretty proud of it.
yeah, well, we're not going to tell you now, so you've got to keep listening to the video. But tell us about Retirable. How does it differ from a typical financial advisory platform, and also from a robo advisor or from an individual certified financial planner or financial advisor?
Yeah, there are a few different ways that we differ from your typical financial advisor, your robo advisor. So one, first and foremost, we're purpose built for seniors. So you can think of 55, 60 plus, that's our target market. And so we've oriented everything around helping that profile of consumer when you're kind of making that shift from accumulation to decumulation, right? If there's a 30-year-old out there, they're probably not the right fit to work with Retirable. Everything we've built is to help those seniors, and we've lowered the barriers to entry. So, we don't prospect based on net worth. We're not out there trying to find someone with 5 million, $10 million. We want to make sure that we are giving the right advice, the right products, and the right services to everyone at that life stage. And yes, we're a tech company, we're venture backed. But we, unlike a robo advisor, we actually use humans where they're most valuable, and that's building relationships, giving advice, answering questions. So at Retirable, you get matched up with a dedicated one-on-one fiduciary advisor. So these are salaried W-2 employees. Nobody works on commissions. Nobody's incentivized to sell any products to customers. Our job is to just give the right advice to people. And our platform, the tech, is doing a lot of the heavy lifting so that those advisors can be really efficient and help out as many people as possible. Each client gets a personalized retirement income plan. So very holistic, going through expenses, assets, across the board, everything you would expect to see in a financial plan. And then that plan helps us build personalized investment portfolios. So we know what needs to come out of what account and when to meet their income goals and to optimize for taxes and to figure out the asset allocation. So everybody gets a personalized portfolio. And then all of the distributions funnel through one high interest checking account. So that makes it really easy to maintain that income certainty that you had in your working years in retirement, right? You know how much is safe to spend every month. You know how much you've spent. And there's always buffers. And if you're overspending or underspending, you get to talk to somebody about what changes need to be made to a plan. But we've really tied together the whole retirement income experience through those three components into one easy to use product. And alongside that, we are always evaluating different ways to help our customers in retirement. So, we recently launched as a free product to all of our customers, fraud protection. So you get up to 1 million of insurance on any fraud, monitoring of your accounts to make sure that, as we all know, those scam calls are getting worse and worse. So, we're really creating a platform here to help seniors in retirement.
And what's the average net worth of your typical customer?
Yeah, typically less than 500K, but it's a really wide range, right? 50,000 of assets up to a few million, right? So, we aren't too focused on what that number is. Most people are going through the same experience when they leave the workforce, and they have the same concerns. Two biggest concerns are, am I going to run out of money before I die? Are healthcare costs going to derail the plans that I do have, right? Nobody wants to be a burden on their family. We don't know how long we're going to be alive for. So there's a lot of huge risks and variables that everyone is thinking about. So we built the platform to service those concerns.
And how can someone with a smaller net worth, let's say under 250,000, how can they expect to have a distribution plan that's meaningful and have their assets last?
Yeah, that's a good question. Personally, for me, those are the people I like to help the most, right? The dollars that they've really put away over their working years, those were significant during those working years. And, this is how much they have. And I think we kind of do a disservice as a financial services industry, because we're always saying, hey, people haven't saved enough, right? With the transition from pension to 401k, it's all about saving. But we know it's hard, right? And just because someone hasn't saved enough or what they think is enough doesn't mean that they aren't deserving of stretching that as far as possible. So I love serving this demographic. And I think one of the really nice things is we often find that we're delivering better advice or better outcomes than people expect. And you can think of someone with a lower financial literacy, not understanding that, you're still going to be living for 20, 30 years. There's still going to be growth on those retirement accounts within retirement. You don't get to retirement and throw it all in cash and see that diminish every year. So we actually find that people are pleasantly surprised when we dig in there and show how much they can have. And with Social Security, you get a higher replacement ratio at that point. A lot of people have home equity that can be tapped into, so factoring that into their plans. But it's just a roadmap, right? Life is going to change quite a bit in retirement, so we want to be there every step of the way, making the adjustments that we need to and making sure we're making their money go as far as possible.
So in other words, you're actually incorporating all of their income and potential income sources, not just that money that is invested with your retirable firm.
Correct. Yeah, it's quite holistic across all of their financial needs.
Now, this is kind of geeky. Some people won't care about this, but being a former investment portfolio manager, Tell me about your typical asset allocation. For a retiree, say someone at 60, 65, not late retirement, but just starting out. What do you
Yeah.
typically recommend? And what type of assets do you build the portfolios with?
Yeah, so it's tough to say typical because each portfolio is personalized based on the expected distribution needs, right? So, if we know we need 10,000 next year, every year, where's that going to come from, and how do we build a portfolio to optimize for those? So we use passive ETF investing, but we structure it around a bucket portfolio, and you can think of this as the risk capacity conversation. If we know we need a lot of money down the line in the future, the growth bucket's bigger. We know we have higher distributions earlier on based on paying down a mortgage, that bucket's going to change. And, your typical ETF portfolio, for most of it, modern portfolio theory, we do use a bond ladder for that middle bucket. So year one's in cash, 2 through 10, depending on your risk tolerance, is going to be in that bond ladder, and then everything else is invested for growth. And every year we're reevaluating those buckets. What's changed in your life? Have you been overspending? What adjustments do we need to make? So it's really built around solving that client need for income certainty in the short term, but long-term growth on the money that I don't need soon.
And when you mention bond ladder, does that mean you are investing your clients' portfolios in actual individual bonds?
We're actually using target date bond ETFs.
Okay, okay. I was gonna
Yeah.
say that would be a little surprising. Yeah.
Well,
Yeah, that
we'll
that
do
makes
another call soon, and we'll see where we're at on that.
Well, no, I love target. Look, I love ETFs. I even love bond ETFs, target date ETFs. It's just
Uh,
cleaner and easier.
Yeah, the bullet share ETFs provide a lot of flexibility for us
Yeah.
to manage these bond portfolios for clients who are going to be changing their plans throughout retirement.
Yes. So I'm not going to make you wait any longer, but your fee structure is quite unique. Tell us how it works.
So we built a platform that serves a lot of different financial needs focused around this retiree and retirement income. So we collect fees at different stages of the client journey. So for our assets under management fee, we charge 75 basis points, capped at $500,000 of AUM. So we don't charge any amount above that if you have $1 million, $2 million, etc. We do make some money on the cash accounts, the high interest checking accounts. If you're using our debit card, we get the interchange on that. But, we've really focused on making this accessible for people. And, I think a lot of the, fee-based planning, hourly rates, that's actually prohibitively expensive for lower income individuals. And, a lot of the tiered structures, you're making a lot more money on somebody who's a higher net worth while providing the same service. So we wanted to be as equitable as possible. We wanted to make sure clients could understand our fees and really make sure that it's accessible for people. So if you are lower income, you're not paying an amount that would be over 1% or over 2%.
Well, that is very rare. And in my experience, although robo-advisors charge lower than human financial advisors, which is typically in the 1% range, I have yet to find a cap. And the cap at 500,000, although for some people it may sound like, well, that's a high cap. I'm not going to get to 500,000. But for people that have started saving and investing quite young and have portfolios that are larger than 500,000, it's unheard of. How did you come up with that?
Yeah, I mean, we had those principles that we wanted to build it around equitability, accessibility, etc. And we spend the same amount of time with you over the phone, on Zoom calls, or running our product. If you have 250 grand or 2.5 million. So, we didn't want to be price gouging people for the service that we were providing. But for everyone, we just want to make sure that, their money that they do have goes as far as possible. So we tried to get creative and make sure that we were adhering to those principles that we laid forth.
Now onto the decumulation. And I'm not sure if that's a real word or not, but I did read it on your website and it kind of makes sense. So obviously that's when you start spending all that money you've saved and you have an income stream plan. Tell me, what is the typical percentage withdrawal rate? Because, a lot of people look at, okay, I can withdraw 4% from my portfolio, 3%, 2%. Do you use that type of thinking, or do you have another strategy for your decumulation and income stream?
I think it's a real word. Although whenever you type it, you get the little red squigglies underneath, and you're like, I thought that was a real word. But yeah, I mean, so we all know the 4% rule. Time, a lot of assumptions baked into that. But it's kind of a blunt way of thinking about retirement income, right? Life is going to change quite a bit. So we kind of take it a step further and actually deterministically look at those expected distributions, because it's going to change quite a bit, right? Healthcare costs are going to change, housing costs are going to change. You might move to see grandkids, or you might decide that you want to start traveling or stop traveling. So there's a lot that's going to change. So while rule of thumbs are great, especially for the DIYers out there who want to do it themselves, and they certainly can, we try and get as precise as possible at expecting what that income need is, and then figuring out the best way to fill it. So there's no set percentage. You do have some people that they're saying, hey, I want to spend more in that first 10 years, those go-go years. Or some people that are saying, hey, I want legacy as big as possible. This is the bare minimum I need to maintain my lifestyle. So it's going to be different for everybody. I wish I could just have a billboard that's saying it's actually 4.5%, but that's not true. Everyone's different. Everyone has different risk profiles. Everyone has different needs, family, etc.
Well, it's nice that they can achieve that type of customized assistance at what is really a reasonable price point for someone who's seeking financial advice. So as we get close to wrapping it up, what is your best advice for older Americans who think they don't have enough saved up for retirement?
Yeah, so this is a tough one. Well, it's an easy answer, but it's one that gets asked a lot. That kind of frustrates me, because we kind of look at retirement as like, all right, you're working, you stop working, and that's it. But regardless of how much you have saved, there's going to get to a point where you're no longer working, right? Whether that's by choice, and you have the ability to retire, or you might be in that situation when you didn't plan on it, or you can't do it anymore. So I think for everyone, the advice is straightforward, and you'll probably hear this from any financial advisor in the US. It's never too late to start planning, even if you're already retired, right? You can still make the right decisions and improve your outcomes financially in retirement. So my push is, whether it's at Retirable or anywhere else, just start that planning process. You're going to learn a ton. You're going to help. You're going to understand what your needs are, what your goals are. Having somebody alongside you to dig in on the numbers is just a way to make that process simpler and easier on you.
I think this was informative, fascinating. I'm really glad I got a chance to chat with you today, Tyler. Before we wrap up, is there anything else that you'd like to share with our viewership?
No, I'm really excited to be able to share everything that we've built here. We're a mission-driven company. We want to make sure that we're helping as many people as possible. And Barb, you've been in this industry a long time. This is it's a growing problem that not enough people are getting access to the financial advice that they need, and we want to be part of the solution. There's a lot of different solutions, and I think, what are we up to? 12,000 people are retiring every day. That's more than any financial service provider alone can service. So I appreciate you helping spread the word about Retirable, but there's a lot of other people out there helping, and we're happy to be a solution to that.
Well, thank you for coming. I am Barbara Friedberg. I do have to let you know there's going to be a lot of information below in the description box, including links to Retirable, and our company has partnered with Retirable. So if you do sign up through one of our links, and of course you don't have to use those links, our company will get a small commission to help us provide more videos for you. So thanks for stopping by, and we will see you next time.
Thanks, Barb.